So let me go over the income statement. So this is the very simple example of income statement. I will give you more complicated income statement example. So income statement, you can see that we start with revenue, and then cost of goods sold is the cost of the company, and then research and R&D, that's expense, and the sales and marketing is expense as well. General and administrative expense, that's also expense. Goodwill impairment. So added together, it will be total operational expense. And you use the revenue to minus the operational expense, you get operating income. This is very fundamental stuff. I'm sure everyone, you guys know it. And then we have other income. So the company has other income, 500 some dollars, and the income before tax, and some income, and you get the final income statement. So there's two things I want to discuss on the income statement. First thing is, when people look at the income statement, normally people look at the bottom line number. So here, 6978, look at the bottom line number. But the bottom line number is from different things. The bottom line number is actually a combination of the operating income and the other income. Let's say this bottom line number. Let's say forget about tax. So let's say people look at the 22,267, the number. Let's say people focus on this number. So one message I want to deliver is, if you just look at the bottom line number, you may miss some information. For example, here we have other income, we have operating income. One message I want to point out, which is your project one, is what's the nature of operating income and what's the nature of other income. Let me explain to you what does operating income mean, what's other income mean. So for example, if I'm a manufacturing company, my operating income is the income from selling the product. That's operating income. So what is my other income? I maybe rent out my facility to other company. I get a rent income. That is my other income. Maybe I have some free cash flow. I use the cash flow to invest in stocks. I gain some gains from stock investment. That's my other income. So one thing I want you guys to think is, do you want like holding the income constant? Do you want high proportion operating income, or do you want to high proportional other income? So just rephrase the question. My point is, let's say the company is earning $22,260. That's constant. Do you want the number is all from the company's primary business operating income, or do you want the number is from the company's side business, like a rent out facility, like a stock investment? Which one do you prefer? Which one do you prefer? I'm sure you guys have the answer. I'm sure you guys have the answer. So what's the idea? So why do you want? So once you have the $22,260, why do you want the number? The most of number is from the operating income, primary business. Why you do not want the number is from the company's side business, like stock investment? Why is that? The one reason I want to tell you guys is because the persistence. Is the persistence. The reason is because the income from the company's primary business will persist. So for example, if I have a contract with Apple, and this is my primary business, likely I will have the same contract in the future years. But if I invest in stocks, I can gain return from this year's stock investment. How likely I can gain return from next year's stock investment? I'm just a manufacturing company. I'm not a professional investor. How can I know the gain from this year's stock market will continue to the next year's stock market investment? So the reason we want the bottom line number from the primary business is because the primary business is the company's core business competitive advantage. So if the most of proportional income are from primary business, and then we will have the company will have more healthier return in the future, more healthy income in the future. So that's the idea. That's the idea. I would spend more time on that. I would spend more time on that. But idea here is, after you take this class, do not just focus on the bottom line number. Just do not focus on, oh, the company is making $22,267 income. That's not a question number you should fix on. You should see the proportion. How much is from the primary business? How much is from the other business? You want a high proportional income from primary business because this is repeatable. This is recurring. Because the primary business income can continue in the future. That's what you want. So this is just one example. This is just one example how exactly you should understand income statement. Okay, so this is basically the example of the data you can use for doing analytics for this class. So let's look at the income statement. So this is the annual one. Okay, this is annual income statement, and this is the quarterly income statement. They are very similar. They're very similar. Let's just focus on annual income statement. So so you can see that the structure of the data is very similar to the example I gave you guys, but this is more complicated. This is a complete income statement data you will have to do the data analytics. So you can see that for the sales, you start with sales. The sales variable you will be available, and then after sales you have cost goods sold, you have a gross profit, and you have different R&D expense, staff expense, pension expense, rental expense. So you have all the variables available for you to do the calculation, and then you have operating income from depreciations, and you get the and then you have depreciation, and you have an interest. So this is very similar to the example I gave you, but this is a complete example. That one I gave to you is just example for illustration, just to guys get the idea. This is what you see from the real firm. This is real firm data for the income statement. So you can see that they have a non-operating income, and you have the special item, pre-tax income statement, you have tax, and you have income from extraordinary item, blah, 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 and you have everything, and you have earnings per share, and you have other information. You have the statement acquisition. You have, so there's many information here, many information here. So the idea here is, how can you consolidate all the numbers together and tell investors this is the company that we want to invest? And you can tell investors, managers, oh, you can tell managers, oh, hey, the company is not doing well. There's some like liquidity issue here. So basically, idea here is you analyze all the variables to provide insightful comments, recommendation for investors. Also provide insightful comments for managers to manage the firm, manage the cash flow, manage the liquidity. So this is the income statement. The folder is on the file is on the file. So so Sharon can upload the file in case students want to take a look. So so basically the big picture here is, this is very complicated information. You start from sales, and then you have the expense, you have earnings, you have other earnings, and you have all other information, acquisition, acquisition stuff. So these are the lot of information you need to reconcile. You need to consolidate in order to help investors. I want to make the case a little bit more complicated here. Let's look at the balance sheet. The balance sheet is also complicated here. So you can see that we start from the current assets. We have a cash, we have a short investment, we have a receivables. So you have a non-current assets. So you can look at this, how many variables we have from the balance sheet. We have about 124 variables available from the balance sheet. And how many we have from the income statement? We have about 120 variables from income statement. How about cash flow statement? How many variables we have from cash flow statements? About 35 cash flow statement. So idea here is, if you adding all these variables together, we have around like 250 variables available from the financial data. So the idea here is, I'm not counting stock returns, right? This is just fundamental data. We have a stock returns. We have a liquidity. We have a trading volume. I'm not counting those, right? I'm not counting those. So what I'm saying is, just from the balance sheet, income statement, the cash flow, we have a 250 variables for you to analyze. So if you are professional, if let's say one investor asks some of you, let's say Chao Chu, investor come to you say, hey Chao Chu, there's a huge information here, 250 variables. Can you tell me what I can learn from the 250 variables for the firm? So Chao Chu, that's what you need to do. You need to know how to analyze these variables and generate some useful recommendation for investors, right? And also you should analyze these 250 variables and provide good comments for managers. And that's what we learned. That's what we learned from this class. That's what I want to learn from this class. And how do we do so? How we can actually generate insights from these 250 variables? It's more than 250 variables because we have a stock returns, stuff, momentum, so it's more than. So how exactly we can do so? How exactly we can do so? Let me share my other screen. So there's a two approach. There's two approach to do so. One approach is you come up with a theory, and then use the theory to test whether the theory, the pattern generated by theory can help investors and managers. That's one approach. Another approach is using machine learning. The machine learning approach is a little bit more of like a high dimensional data process. So basically, you throw in all the 250 variables into the machine learning as an input, and then the machine just learn by itself, just keep training itself and tell you which one, what kind of pattern can help you generate future stock returns. So let me talk about the two approaches side by side so you can see what's the idea behind. So what's the example of theory-driven approach? So what I just talked to you guys now, that's a theory-driven approach. Does it make sense? Because I tell you the primary business, the income from primary business is more persistent than side business income. So we prefer firms income are most from the primary business, not side business. So that's a theory-driven approach because I have that in my mind. I have the theory in my mind. I think the primary business will persist more than the side business. So I prefer